Yo, what's up, y'all? It's Mo. Welcome back to my channel. This is the third and final introduction video to my trading. In this video, we're just going over my model, exactly what I'm looking for in the market, the setup I'm looking for and stuff. Let's get right into it. Here we have Mo's 22 model. I just renamed it from the ICT 2022 mentorship. That's just the model he taught. Disclaimer before we go forward, I am not an educational trainer, trader. I'm not an educational trader. I'm not trying to teach anybody about trading. I'm not giving trading advice. I'm not a profitable trader myself. I'm not a credible trader to be learning from. I'm not trying to teach trading. I'm literally here just to show my model, show exactly what I'm looking for in the market. So if any of this terminology is confusing or anything, you guys will just have to, go on ICT's channel and do some note taking and stuff. But yeah, I just wanted to put that out there. So anyway, what I'm looking for in the New York AM setup, the New York AM session starts at 8:30 a.m. New York time, goes until 12 o'clock. I trade because I have to go to work. I just wake up, like I said in the last video, at 5:30, get on the charts at 6:15. This is Arizona time, so would be 9:15 New York time. I'm on the charts, and then I trade from like 9:15 New York local time to 11:15, so like 2 hours. So yeah, so what I look for in the New York AM, this is my model right here. Wait for Judah swing to occur, which is a fake move before the real move. Anticipate a liquidity grab and look for imbalances, fair value gaps for market to fill. Wait for displacement of market structure, a market structure shift. Look to see if fair value gap formed. Wait for price to fill fair value gap and enter trade. So here, this is just a picture of the example of my model, of the buy model and the sell model of it. So here we have buy side liquidity between 8:30 and 12. We have that buy side liquidity here. Then the market pushes all the way down to trading below under this thin black line, which is sell side liquidity. Trades into sell side, displaces up, breaking above that swing high, which is a market structure shift, a bullish market structure shift. Then in that displacement move, we look to see if a fair value gap forms. That fair value gap forms, that or orange rectangle, then price drops into there. When price drops into there, we want to pop a buy. Enter a buy, stop loss below that low. Where's our take profit? At the resting buy side liquidity above here. When price trades into that buy side liquidity, then we look for the same exact thing, now just for the sell. Short-term low forms, we're looking for a displacement through that low, we get it. Then a fair value gap to form, that's that orange box. I think that orange box was like a 2-minute fair value gap or 3-minute fair value gap. But this was on the 1 minute, as we can see right there. So there's two of them. This fair value gap 1, this fair value gap 2. It trades fully into this one, then trades back into the first one a little bit, pokes above there in 2 times, and then trades down into where? This sell side liquidity. I didn't take this buy. This was on April 8th of this year, like 3 months ago. I didn't take this buy. I was trading this morning, or like this session, but I didn't take this buy because I was waiting for this first fair value gap to fill, which we can see over here. It ended up getting filled, but I was waiting for this. Obviously, I was more inexperienced at the time, so now I know when there's 2 fair value gaps, I enter on the first one and then have my stop, still have my stop below that low, to make up for, to leave room just in case price goes down into that second one. So that's why I didn't take this buy, unfortunately. Obviously, like I said, now I learned from it. I know to take the first one, so I would enter this now, but I didn't take this. But I did take the sell live. I have proof. I can show proof of it. I'm not faking nothing. I'm not one of those fake traders out there. I mean, I'm not even profitable yet, so I don't even know how to be faking stuff anyway. But anyway, so, but I took this sell. I remember seeing this, because I was mad as fuck I missed this buy. I'm not gonna lie. I was like, damn. I was like, shit. I was like, whatever. I'm gonna stay patient. I stayed on the charts a little bit, and I was like, give me a sell model. I was like, let's do it. Let's go. So right here, we got, I think it was like 180 to, what is that, 98? So that's like 100 or 80 points. Yeah, that's like 80 points. Definitely solid trade. I was only risking like 20 points too, so it's like a damn near 4-to-1. That's just beautiful. So scrolling down, we can see here, I wrote this for myself like a month or 2 ago. Trading is so simple. Stop overcomplicating it. Only trade your setup. The only way to be successful is to follow your system perfectly every day and never break your rules. Obviously, trading is not simple, but now that I have a model, and especially one I know that works, then all I have to do is follow that and follow that setup every day. I only need to trade one setup for life. Trading is simple now that I have a strategy that works. So that's what I mean by that. These are the rules I have to follow. I created these over time. So I have 8 rules. My first rule is price has to be doing exactly what I'm looking for me to even be interested in the idea of taking a trade. It has to be a textbook setup. If exact things aren't happening in the market, do not enter any trades. This is through experience. All these rules are through experience. Basically, the exact things that I was looking for in the market, like, wasn't happening, and I was just taking random ass trades, taking random ass setups, just literally gambling. Even like 3-4 months ago, there was some setups I was still trading my model, even though in phase 1 obviously I passed and stuff. There were still a couple setups that I was like, what the fuck was I doing? Like, I literally just entered just to enter, just to try to make money. Every trader's problem comes back down to being focused on making money. Rule number 2, I have to check off every box in order to enter trade. If every box off the checklist isn't crossed off, I can't enter trade. I know I'm basically saying the same thing twice, I'm just rewording it, but that's how it has to be for me. I have to actually like engrave it in my brain, so I just have to like basically say it twice in different wording. When I scroll down, I'll show you guys what I mean by that. I have a model checklist and daily psychology rules checklist. Rule number 3, accept loss before entering trade. Be okay with losing what I'm risking. If I don't like how much I'm risking, then don't take trade a lower size. This is honestly so simple. I just have to accept my loss before I enter a trade, and this is gonna make things way easier if I do lose that trade, of accepting that, like, I've already accepted the loss before I entered, so I'm not even tripping if I'm losing because I already accepted it. Like, it is what it is. I only have to take trades that I'm comfortable losing. If I do that, then I'm gonna have no fear of losing, because I do still struggle with that. That's why, like, I exit trades early. Even if it's my textbook setup, I sometimes exit early because I'm scared of losing. I'm scared of being wrong, but it's just a part of the game. And like I said, I just have to accept the risk before entering. If I do that, I'll be okay. Rule number 4, when is a textbook setup with a good risk reward, aligns with bias, and correlates with a higher time frame, I have to enter the trade. Basically, in other words, in other terms, if it's my setup, I have to enter. I used to have a bad habit of having a fear of entry. So even if it would be my textbook setup, everything off the checklist was checked off. Like, it was literally perfect. I still wouldn't enter because I didn't want to lose money. I was literally scared to lose. So this is basically just saying, like, if it's my setup, I have to enter it. Rule number 5, create daily bias. Look at higher time frame to see where price is most likely to draw to. Mark up key points in the market, where liquidity is resting, where balances are, and where equilibrium is in the range. This is really important because when you correlate the higher time frames with the lower time frames, those are the best trades. So you always want to start at the higher time frame, start looking at the market, doing a top-down analysis, starting on the daily, or I start on the weekly, then I go down to the daily, then the 4 hour, 1 hour, then literally the 15 minute, all the way down to the 1 minute. So I go through basically every time frame. And the higher time frames are really important to look at, because that's where you can develop your long-term bias, and you'll know where the market is drawing to, or is most likely to draw to. Rule number 6, first negate risk, then let trade do its thing. I must take partials to protect capital and limit losses. In trading, you can't be greedy at all, and that's something I've struggled with, and that's something I sometimes still struggle with, is being greedy and knowing when to take partials. Like, sometimes I do have the urge of just to not take partials and literally just let my full position stay on, because if I let it stay on, instead of $60 I'll be making, if I take some partials and let the runner go, I'll be making 100 if I just leave the position on. And that's where, like, that's bad. I have to take you have to protect your capital in trading. You have to limit your losses to really grow your trading account. Rule number 7, do not exit manually when runner is still going. Trail stop loss and profit and let the trade do its thing. This is something I've done in the past before when I literally don't know why. I have a runner on. It's literally called a runner for a reason. So why am I closing it? Why? Like, I can't be closing it manually. I just trail my stop loss and profit. Either way, I'm making money. Either way, I already secured 75 to 80% of my partials. So why am I tweaking? Why am I tripping? Just trail my stop loss and profit, and then have the runner run to, let that bitch go. Let that bitch run to the ultimate take profit. Fuck it. Rule number 8, if it is a choppy market, do not trade. Be defensive and sit out. My model doesn't work in a choppy market. So this is a good habit that I do have, is not trading a choppy market and knowing when to be defensive. But I added it as a rule just so it's something I have to follow, is when the market is just going back and forth, it's not doing shit, it's a no news Monday, or it's like, I don't know, we got FOMC, it's an FOMC morning or some shit. I know to be defensive and sit out. I have to be. Now, going down to my model checklist. So this is like in rule number 2. I have to check off every box in order to enter the trade. This is what I mean. So the first thing I have to do is identify the swing high and low prior to 8:30. Then I wait for price to trade to one of those levels because at each swing high and low, there's liquidity there. So I wait for price to grab the liquidity. Then I wait for a short-term high or low to form after that run of liquidity. Then I wait for the displacement breaking structure, which is a market structure shift. Then I wait for a fair value gap to form. When price fills that fair value gap, that's my entry. And then I set my stop loss below or above the previous lower high. And then I set my take profit at the resting liquidity or fair value gap. So I have to, all that has to occur for me to enter a trade. My daily psychology rules, this is just as important. Followed all of my rules, traded my model and didn't force. I was patient with price and waited until at least 950 for setup. Why 950? Because that's when the macro starts. So that's when price actively seeks liquidity or actively seeks to rebalance an imbalance. And then I accept my loss before entry. Good lot size, didn't overtrade, no revenge entry, and I let trade play out. So here we have some tips. Honestly, I'm not going to go through these. If you guys want to read them, you can. Still scrolling down. Then we got my 3 ways to take profit at resting liquidity, so old high or low, at a previous unfilled fair value gap, or the negative 0.5, negative 0.1, or negative 1.5 on the Fibonacci. What to mark, swing high or low, formed prior to 8:30. How to view the market. The market only goes up or down to grab liquidity or to rebalance the imbalance, and market runs on time and price. These 2 are the most important things. Market runs on time and price, knowing that, and knowing how to view the market. The market literally goes up or down for 2 reasons: to grab liquidity or to rebalance the imbalance. So now going into the charts, looking at a previous example, we're just a market replay. This is Monday, June 24th. So this was like a couple weeks ago, almost a month ago now. So what do? We're gonna go step by step. So first thing, identify swing high and low prior to 8:30. So prior to 8:30, again, New York local time. Why New York local time? Because that's the time that the algorithm runs off of. So here we get on the charts, 9:15 New York time. What are we doing? Identifying that first swing high prior to 8:30. So here, we mark up that swing high and what is resting above there, buy side, or what is resting right there, buy side liquidity. And then here, we mark up the first swing low prior to 8:30, and that is sell side liquidity, right? But we get on the charts at 9:15, and we see we already traded below that sell side level. So, and again, we have to wait for at least 950 for setup, right? So here, like, we're not even looking for setup anyway, but we already traded below that first swing low. So what I'm looking for now is honestly price to trade up into here. When price trades up into there, then we'll look for other shit. But right now, we just identify that first swing high and low prior to 8:30. Boom. First thing checked off. First thing checked off. Perfect. Then what do? We go on the 1 minute. We drop to the 1 minute. I take my entry between the 1 to 5, all the way to the 5 minute. So I just cycle through like this, like real quickly. Well, I have like I have like 3 charts on my screen because I have a monitor and I split screen my charts. So I have like 3 different time frames. I usually have like the 1 minute. Then that other one is like the 2, 3, like cycling through the 2, 3, 4, and 5. So I always have the 1 minute up, and then I always either have like the 15 minute up, the 1 hour, like a higher time frame up too. So I'm looking at all 3 at once. So here, what do? We get on the charts, right? 9:15. We trade up. I'll speed this up a little bit. So we trade up, and then market opens, and obviously we already traded below that swing low. What are we waiting for? We're waiting for price to grab that liquidity to trade up into this buy side liquidity. So we're not looking for anything else. We are not taking any other trades until price at least grabs this liquidity. Like, it has to trade to there for me to enter a fucking trade. Like, that's what I have to tell myself. That's how patient I have to be. All this shit, even okay, there might be some good scalps in here. No, I have to wait for this shit. So basically, here now we'll start going candle by candle. So we wait for, we're waiting for price to trade up into here. We're just creating more structure here. That's okay. We're being patient. We're not entering nothing yet. We're not even looking for an entry yet. We're literally just being patient. So let's see, 10 o'clock hits, boom. Now, okay, right when we trade up into here and price grab that liquidity, so that's the second thing checked off. Then what are we looking for? A short term, in this case, since we got buy side liquidity, we're looking for a short term low to form, right? So here, we're looking for a short term low. Boom, boom, right here. Right here, do we have that short-term low form? Yes, right here. So we have that low form, that swing low, that little short-term low right there, right? What are we looking for price to do? So that's another thing checked off. Then what are we looking for? Displacement occurring, breaking structure. So displacement through this low. And what is displacement? Displacement is basically just an energetic move. It's literally just an energetic move. So it's not one of these little baby candles. It's like a big, like this is an energetic move, like a big displacement up, right? Like one of those big candles through that low, right? So then let's play it again. We trade up one more time, taking these stops again. Then we just wait. Boom. Right here, we displace through that low. Right here, right? So we mark that up, and what is that called? A market structure shift. Right there. So that's another thing. So now, after that displacement occurs, right? Now what are we looking for? A fair value gap to form. What is our fair value gap? You see, this candle's, hold on. Let me do this. This candle's low to this candle's high. You see how there's a gap right there? Like it never overlapped. You see right here how this wick, this low to this high, like it overlapped, right? Or this even overlapped. There's no gap there. Here, this candle's low to this candle's high. This candle never traded past this low. So there's a gap resting right there. So then what do? We draw that up the rectangle. Oh shit. Hold on. Fuck. Hold on. All right, there you go. We draw that up with a rectangle. Oh, my dumb ass. Look at me doing the wrong fucking wick. What the fuck am I doing? All right. Right here. Boom. We draw that rectangle. So that's a fair value gap. Now, we have our textbook entry. Everything we want. Look at the time. 10:15. 10 to 11 o'clock, silver bullet hour. Market runs on time and price. Beautiful. Absolutely beautiful. So then we're just waiting for price to fill that fair value gap. Boom. This candle. What are we doing? We're in that sell, baby. We're in stop loss. Set at the resting, or no, not resting, I'm tweaking. Set at the, above the previous high. So right here, we're risking 44. Where's the take profit? Set at resting liquidity. Look at this fucking risk reward, dude. Look at this risk reward. Basically 2 to 1. 2 to 1. Easy. Boom. Obviously, if you want to have a, oh wait, what the fuck? No, hell no, that's 99 points. 99, even better. Look at that, 3 to 1. So then, that's our entry. And then look what price does. Trade up into there one more time. Trades up into there one more time. We could pop multiple entries, stack multiple entries. Boom. Trades to where? Aggressively. Trades down here. What does it do? It's retracing up to where? To fill this imbalance. The price goes up or down for one or two reasons. To fill imbalances or to seek liquidity. Boom. Boom. Look at this. Come on now. Easy. Absolutely easy. That's how easy the model is. And yeah, that's literally it. So that's my model. That's how simple it is. Everything was checked off the checklist. When I follow that, it works. And obviously there's going to be some times that it can be textbook just like that, and I'll get stopped out. But that's the reality of trading. Not every strategy is 100%, has a 100% win rate. So that's okay. As long as I'm following all my rules and I'm trading setups like that, I'm chilling. That's all I should get satisfaction from that. If I lose, that's a good loss. I'm like, okay, well, I followed all my rules. I didn't over leverage. I waited. I was patient for price. I waited for my exact setup to form. I checked off everything off my check log. You know what I mean? Everything. I have to be happy with that win or lose. You know what I mean? So that's perfect. That's my setup. All right, so now we're gonna get into my back testing that I've done over the past couple months and stuff like that. I got a bunch of different folders going over my my funded profits. I screenshot my funded profits. basically all the trades that I won on my funded account, my phase 1 and 2, and then also my funded lessons. You see how I don't I don't have it like funded losses, it's funded lessons, because you have to take every loss as a lesson in trading. So obviously I have a lot. Look, I'm not scared to show this at all. I have a lot, and honestly, like same as my profits too, I have been a little inconsistent lately of not screenshotting my trades, so not really journaling my trades, which I definitely have to get back to, and I'm 100% gonna get back to literally tomorrow. I have to do it, but I've been a little inconsistent with that. You know, I'm not scared to say that I'm human. You know, I'm not fully consistent. That's another reason why, you know, I'm not profitable yet. But yeah, so, but I do have a lot of, you know, lessons and profits. And then over here though, this is where like, this is trading concepts. This is all the concepts I use to trade. This is every single concept I use to trade. Obviously all ICT concepts, they're not my concepts at all. I literally just learned from him. So here, this is the ICT fair value gap. Remember the model I just showed you, the exact trade I just showed you? This is on, look, 2023. This, literally any day this can form. Oh, like multiple times a week this forms. We wait for, look, we're in that, look at the time. We're in after 10 o'clock, so in the silver bullet hour. What does price do? There's buy side liquidity here, trades up, creates more buy side, trades down into where this imbalance right here, this fair value gap, trades down into there, then trades above this liquidity. When price trades above this liquidity, what are we looking for? That short-term low to form. Okay, it forms right here. Hold on. Forms right here. There we go. Then what are we looking for? That displacement move below that low. Then what are we looking for? That fair value gap. That's that red rectangle. That's that red box. Trades up into there. Boom. Pop a sell. Where they go to? This sell side here. This sell side here. Perfect. Power of 3. Accumulation, manipulation, distribution. Accumulation of orders. We have that manipulation move down and honestly up. I ain't gonna lie. We got that manipulation move up right here, taking out this, taking out these traders, manipulating the market, manipulating everybody, thinking like trying to fake everybody out. Oh, we're going higher, we're going higher. We broke out this range, set stops, you know, trail stops. No, shorty. We going all the way down here. We trading below, even below these lows. Look, traded below those, took out everybody. Then we trade higher, that manipulation move. And then we distribute orders at this black line, which is resting like old high, which is buy side liquidity. Boom. Scalping fair value gaps 2.0. So this is kind of where you can use another fair value gap as a take profit here. So you don't always have to use liquidity, like resting liquidity, old high or low as a take profit. So here, what do? Prior to 8:30, below that first swing low, we trade below it. Then we have that short-term high form right there. Then we displace through that high, fair value gap formed, trades into there. Pop an entry, right? Entry 1. Where is our take profit? We're not taking profit. Why would we not take profit at this high? Why would we not take profit at that high? Because this high already took buy side liquidity. So look, before this sell down, or before this buy entry, right? We had this big sell down after we grabbed buy side liquidity. We had this displacement down, leaving fair value gaps, breaking structure, breaking these lows, and we never filled. So price is going to go back up to sell. That's basically just the sell model. That's literally the sell model right there. But in the meantime, with the market going up there, it forms a buy model, taking sell side liquidity, forming that short-term high, displacing through that short-term high, forming a fair value gap in that displacement move, fills it, pop it, boom, pop it. Pop it, I'm dead as hell. Talking about pop it, I'm tweaking. Fucking pause. Pop that entry. Take profit. Get the fuck out the trade right here in this fair value gap. When we get out that, we can pop a sell here because that's literally the textbook model for the sell side right here. Pop a sell. So entry 1, exit 1. Boom. Then we pop a sell. Entry 2, exit 2. Where do we take profit? At the resting, at another unfilled fair value gap. Could you see here it only traded down into the first one and never filled the second one? Price goes up or down for 1 or 2 reasons: to seek liquidity, to grab liquidity, or to rebalance the imbalance, to fill fair value gaps. Boom, literally so simple. And then in exiting that sell, we can then enter a buy. Because this is textbook buy model. Boom. Where do we take profit? Now we can take profit at the resting liquidity. Right there. That would be 167 points total. No, I did not take this trade. No, I did not take any of these trades. This is me back testing. This is me studying this. So I know when the market does, like this happens, this occurs, I know what to do. I know where to get in and I know where to get out. Here we have the accumulation fair value gap. So basically this is after price accumulates and just consolidates. You see right here how price just accumulates, right? And it's just going back and forth, building up orders. Then it breaks out to the upside, breaking this high. That's like a break of structure too. So when that happens after accumulation and if a fair value gap forms, we can enter that buy. So when price accumulates, look for displacement move right here. We got that breaking structure to either side. In this case, it was to the buy side. Then look for value gap to form and enter. Boom, the pop. This trade, I know I cut it a little early. I was in market replay. Trust me, it ended up. You can go look back on it yourself if you don't believe me for some reason. Trades all the way, keeps going higher. This is consequent encroachment, and this I just started using in my trading. Actually, I did actually take this trade. So I did actually take this. I can show this trade in my trading accounts in my trade history. So we see on this trade, there's bullish order flow. So in bullish order flow, the market's always going to respect bullish PD arrays. So we see here, price what? Respected this bullish fair value gap. Then what does it do? Form another fair value gap. Respects it, trade up. Then what does it do? Forms another fair value gap, respects it, trade up. I did actually enter on this fair value gap. I did enter. I exited due to fear, due to chop. I wasn't patient with price. Price was choppy. I was like, fuck. I was like, it's kind of being slow. Like I'm scared to lose. I don't know. I'm gonna get out. I got out like, I think $10 in profit or some shit like that, 10 points in profit. And then obviously in hindsight, look at it. It went all the way. Like, why the fuck am I? This is a good entry. Like, I don't know why I'm exiting this. This is what I'm talking about. But anyway, so entry 1, I exited. But entry 2, this is where I used the consequent encroachment strategy. So right here, you see this wick? See this wick right here? You measure the start of that wick to the end. The 50% level of that wick is consequent encroachment. Look at price. Ooh, fully trades down into it. Respects it perfectly. Look at that. Look at that beautifulness. Look at that. Respects it. Hold on. Respects it perfectly. Then I take off. I popped the dollar lot size. So took off 25% right here. And then took off the remaining 75% full position off at this resting liquidity there. Amazing trade, consequent encroachment. Then we just got some pure FEG entries. I'm not gonna show y'all this. Y'all fucking get it already. I've been, rambling for too long. That's basically just all like that. Those aren't trades I've taken. This is literally backtesting. Like I said, most of this is backtesting. Obviously, if you want to go in the trades I've taken, we can go on my funded profits. I'm not gonna show y'all this, just because it's kind of going on. Dude, just getting a little longer than I wanted it to, and we can get into my lessons too. Like I said, I'm not scared to show my losses at all or my wins. I want to be as transparent as possible and authentic as possible. That's my work. That's how I trade. That's my model. Now that I'm finally done with the introduction to my trading and you guys know my backstory, you guys know my habits, you guys know what I'm struggling with, you guys know my preparation, you guys know my model, you guys know everything about my trading now. You guys know where I'm currently at and everything. So now I'm gonna get into my regular uploading schedule of every day, where Sundays I'm gonna be doing weekly forecasts and my prep for the week, and then Monday through Friday I will be uploading my daily live trading sessions. They're not gonna be live, like I'm not gonna be live streaming them, but I'm gonna be recording like my reaction, my me trading live. Just obviously it's not gonna be like a live stream. And then, I'm going to show, 100% proof of my I'm going to literally record my trading platform, record me entering, record me getting out, record everything. So there's going to be 100% transparency, nothing to hide. I'm not hiding nothing. Even if I lose, even if I'm emotional on camera, like I'm fucking taking dumb trades, revenge trades, I'm going to show all this. I'm on the road to profitability. You got to be 100% transparent with y'all. And I'm trying to be, I'm trying to show everything. So I'm not trying to be, a fake ass trader that only shows my wins and shows the good side of trading and shit. No, I'm not profitable yet. I'm on the road to profitability, and like I said, I want to show. That's the point of this channel. It's to show y'all literally everything. So yeah, that's basically it. I will be uploading tomorrow. I'll be recording my weekly forecast, just doing my prep for the week, going over last week, like doing my weekly review, my summary and shit like that, and then doing my weekly analysis. And then yeah, from there, like I said, Monday, I'll start uploading. Monday, like evening or so, I'll upload that trading session of that morning. And yeah, so that's what you guys can expect moving forward. And I appreciate y'all for taking your time and watching my content and watching this video. If you guys can give a like and subscribe and comment, I appreciate y'all very much. And take care and stay safe.